You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. It is Monday. It is noon Central, 1 p.m. Eastern. Yes, it is time for us to kick off our broadcast week here on the Options Insider Radio Network with a perennial favorite out there for a lot of you, the old Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon you listening, not just to the Option Block, but all the other dozen or so shows hitting you throughout the week out here. We see so many new people discovering the network every week these days. We love to keep that up. It's more important than ever in these troubled times for folks to have a reliable source of content on these markets and on fun things like volatility. So if you like what you hear, keep those reviews coming in your platform of choice, Apple Podcasts, Stitcher, Spotify, YouTube, wherever you get these fine programs so new folks can continue to discover these programs. And, of course, keep those questions coming. And also, a slew of you have been really enjoying our kickoff fun little element we like to do around here with our 80s theme guessing. I'm guessing you like to stump our co-hosts here on the show as well. Probably a little bit of that as well. So without further ado, let's dive right into it. It is time for our 80s theme guessing game of the week. This week submitted by listener Jared Burgess. All right, here we go. This one might be a little bit more difficult for some of you out there. We'll see. All right, that'll do it. That one, I have to admit, I recognize it, but it wasn't in my pantheon of 80s go-to programs. We'll see. Maybe you guys succeeded. Maybe you did stump our co-host here. Speaking of co-hosts, you may have heard a little bit different intro to the show this week, mixing things up a little bit. Going to be talking a little bit more about vol these days. You guys always love us when we talk about volatility, so we're going to make it even more of the focus these days. And joining us, holding down the NASDAQ hot seat, to talk about all things volatility on the show today, old friend of the network, even though he hasn't been on for a while. He is Scott Nations, the president over there at Nations Indexes. Scott, welcome back to the Options Insider Radio Network, A. And then B, can you guess that theme song, sir?
Thank you so much, Mark. It's great to be on. And I do know the theme song. Should I tell?
Yeah, go for it. You get pride of place. If you get it first.
It's the theme to Dallas.
Wow. Well done. All right. I wasn't sure that might be a little bit more difficult for our listeners out there. Like I mentioned, that one was submitted by, what was the name? Jared Burgess, a.k.a. J-Bone. He says, I highly recommend the opening for Dallas. That was an epic opening theme song. And who doesn't love the dramatic trials and tribulations of JR? Well, sounds like Scott is in agreement with you. Let's see what the rest of our co-hosts also agree with you. Next up, we are joined going out to the quiet, tranquil hinterlands of Chicago, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well. A, and B, did you recognize that song, sir?
I got to be honest, I did not recognize it. Thank you to be here, but I'm going to quote Hank Williams Jr. in one of his songs, "This ain't Dallas."
So there you go. Scott bailed you out there. You didn't have to miss on that one. And last but not least, we dial the handle all the way around. Used to be to outside Chicago, now down to almost south of the border there in Texas land by way of Austin, where we are joined once again by Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. How are things in the hot and sultry land of Texas, sir?
You know, it's not. It was not in the 30s this morning when I woke up. It was in the. It was about 65. So pretty darn nice. I would have recognized that theme if it was the theme to Austin. But since it's Dallas, well, I don't know.
Are you allowed to like Dallas and Austin? I don't know how it works down there.
It's split between between Cowboy fans and Texan fans.
Oh.
Generally speaking, baseball wise, they're all Astros fans and they're Spurs fans for basketball. So it's an interesting mix. It's 50-50 Texans, Cowboys. And then it's
two-time losers in football this year with those choices.
Yeah, no kidding. And although, interestingly, most of my block is Bears and Packers fans.
A few expats.
Yeah, a lot of, ex-Illinois, not expats. Expats would be from New England.
Oh, there you go. I like that indeed. Sounds like you have some difficult navigation of minefields to do down there. Meanwhile, it's time for us to navigate the show. Going to mix things up a little bit. Going to bring back an old drop we haven't had a chance to use in a while. Yep, it is time for the interview block.
The interview block.
I love that one. That's old school. It goes back to the early days of the program here. Of course, the interview block. You may not have heard this one for a while because usually we do it a little bit differently here. But again, mixing it up this week to dive into a topic or a subject or an area or in this case a product that you guys may not be familiar with. And like I mentioned, joining us in the NASDAQ hot seat today, Mr. Scott Nations, a president over there at Nations Indexes. Scott, my producers tell me your last appearance was back on Volatility Views 131 in October of 2014. That doesn't seem to be possible. I'm sure you've been on since then, but it's been a while nonetheless. Welcome back, Scott.
Thanks so much. I guess you guys lost my phone number.
We must have lost you out there. You've been busy doing one or two things since then. So let's get to that. But first off, like I said, it's been a number of years since you've been on. We've had an influx of new listeners. So a lot of new folks tuning into the program. Maybe they missed out on your last appearance out there. Give them a quick overview of your background in the space and what the heck it is you guys do at NationShare, sir.
Well, what I have done is spend 25 years as a proprietary option trader. So stood in the pits in Chicago at the Board of Trade and the Mercantile Exchange trading options for my firm's account. And out of that grew a fair amount of knowledge, understanding of how options work. And then when the whole thing kind of went on electronic, we realized, let's use this to build better tools for our own trading. And that's what we did. And the interesting thing is that we were able to really to publicize some of these products, to calculate and disseminate them, and to help all sorts of investors and traders use these to understand what's really going on in the option market. And so that is how Nations Indexes got started. And we are the world's largest independent developer of option volatility, option costs, and option strategy indexes. And probably best known right now as the providers of the methodology for VOLQ. And what is VOLQ? That is the NASDAQ 100 Volatility Index. Ticker symbol is VOLQ. uses our Voldex methodology on NASDAQ 100 options. And that's going to be an important tool as more and more portfolios end up looking like the NASDAQ 100. And the CME today is going to launch futures on VOLQ. Ticker symbol for those futures is VLQ. And that product is different in that it focuses on precisely at the money implied volatility, precisely at the money, as opposed to traditional implied volatility measures, which use essentially every out of the money option listed in the front couple of months. So how's that?
Not bad. I think you've done this once or twice, or maybe a few hundred times here, Scott, breaking it down. But let's get to some of that methodology. Our audience likes to get into the weeds here. Obviously, they're familiar with existing volatility products like VIX and Spikes and others that pretty much use the S&P 500, and they pretty much use that, not effectively a full strip, but a kind of a smattering of the strip. They factor in the call wing and the put wing in addition to that at-the-money volatility to try to get more of a snapshot of an entire month's worth of volatility. So why did you decide to go the other way, Scott? Effectively go back to a methodology that's similar to the early days of VIX and just go straight at the money?
It's a great question, Mark. As a trader, as a guy who actually stood in the pit, whenever you would walk back into a trading pit, an option trading pit, or now when people sit back down at an option trading desk, what's the first thing they want to know? They want to know what the at-the-money implied volatility is. A guy would walk into the trading pit and say, what's the straddle? Well, that's shorthand for what's the at-the-money implied volatility. And that is what Voldex and VOLQ measure, is that at-the-money implied volatility, because that's the most important measure. And then everybody gets to fill in the rest of the picture themselves. They get to fill it in the context of what they see. As opposed to, say, the VIX or a traditional measure of implied volatility, which will have hundreds of deeply out-of-the-money options involved in it. The VIX, for example, right now uses options that are more than 50% out of the money, 30 days to expiration, more than 50% out of the money. Those aren't really useful options. Those are lottery tickets. So people used to walk into the pit and ask, essentially, what is Voldex? Nobody has ever walked back into a pit or nowadays sit back down at an option trading desk and said, please give me a strike price weighted average of every out-of-the-money option that's listed in the front two expirations. That's not how people look at volatility, even though that's what VIX is.
Let's get to that a little bit because it is kind of interesting. Of course, these are also interesting times to be launching a product like this. I think you can look at it through two lenses. One is that there's a lot of interest in volatility. There certainly is a lot of volatility out there, a little less so now than there was a few months ago, but interesting timing nonetheless. And also a challenging time because just on the regulatory front and everything else, getting all those ducks in a row has to be a little bit challenging during a pandemic. Maybe walk us through that, Scott. Why decide to dive into the volatility fray now, and how challenging and or maybe opportunistic is it to dive into that fray right now?
I think it's never too early to offer an opportunity to investors. And that's what we're trying to do. We're trying to provide an opportunity to investors, an alternative. And that is a product, first of all, that's based on the NASDAQ 100, which has the most important stocks in the American stock market in it, and a different volatility, a different measure of volatility, different way of looking at volatility. So an alternative is important. We also think that that there will be people who want to trade VOLQ against VIX because you can get all sorts of really, really interesting exposure that you can't get any other way. And I'll just say this, America loves alternatives, and if we didn't have alternatives, if people didn't come along and create a better mousetrap, then let's face it, everybody would be using a computer that they bought at Radio Shack, and the search engine you'd be using would be something like Ask Jeeves, and we'd all be driving a Ford, and there'd be no other cars out there. So people love alternatives, particularly when they're well-designed, and we think VOLQ was well-designed.
Hey, I was a big Ask Jeeves fan back in the day, so I will hear no besmirching of Ask Jeeves on my show here, Scott. It was useful for a certain segment of the audience. I could monopolize Scott all day, but I know you guys have questions as well. Let's start with Uncle Mike. By the way, Uncle Mike, a little birdie on my shoulder telling me maybe it might have been your birthday of late. So happy birthday, A. And then B, what questions do you have here for Scott about all things VOLQ and NASDAQ volatility, sir?
Well, thank you for the birthday wishes. It was my birthday yesterday, and a little bit of useless trivia.
Happy birthday.
Thank you. A little bit of useless trivia. It is on October 4th, 10/4, which not many people know this, but it is National CB Day. So,
Mike, I forgot to tell you. So Mark's teacher at down here, my older son is also named Mark because we're creative. is actually from St. Charles.
No kidding.
Yeah. So
small world.
It's a small world. St. Charles bringing everyone together.
There you go.
Happy birthday.
Well, good. Well, thank you. Okay, well, Scott, I just have one question on this. So when we're looking at VOLQ, I know that so the VIX, for example, it has the spot settlement on it, but also sometimes the futures act a little bit different than the spot going into settlement. How's that going to work if on options with this? Now that you're going to have futures on them, how's that going to work when doing calendar spreads? 'Cause sometimes calendar spreads can be a little bit iffy, or they're just not going to be able to do them a lot of times if you're trading the VIX. So how will that work on the VOLQ?
The VOLQ options have not listed yet. NASDAQ intends to launch them first half of next year. But let's face it, the reason that calendar spreads are kind of goofy in the vol world is because of catalysts. So if you have if the front month doesn't capture the catalyst that the back month does, then it gets a little goofy. It's not that much different than a calendar spread in a single name where, say, earnings falls in between those two expirations. So the fact that VOLQ is not subject to a bunch of statistical noise generated by issues like skew should tend to make it easier to use them in calendar spreads. And the way we talk about this is that if you look at VOLQ, and today, for example, VOLQ it's down about 2.5%. You know exactly what is happening in NASDAQ 100 options. The at-the-money stuff is lower. The implied volatility is lower by 2.5%. But if you were to look at, say, Vixen, which is the VIX-style methodology that uses the NASDAQ 100 options, you don't know what's going on. While it's down a little bit, you don't know if that's coming from at the money. Is it coming from juicy puts? Is it coming from deep out of the money puts? Is it coming from calls? And we know that the answer to that says very different things about an option market. But when you have this huge basket of options, it's impossible to tell what's really going on. And so we say you have to deconstruct skew to understand what a market is really telling you.
Deconstruct skew. Interesting. We talked about this before about the usefulness. Some people really like that skew information. Others view it as statistical noise. Like you said it there, Scott. So I think it's an interesting dividing line in the world of options. I could keep going, but I know, Mr. Meatball, I know you have some questions for Scott as well. What do you have up your sleeve, sir?
Quickly about that, and then I love the questions. But skew can give information, but it's impossible to know, for example, in VIX, whether VIX is higher because of skew or because of at the money or deep out of the money options. So while skew can give information, it's impossible to understand that information, know what that is, by looking at VIX.
Yeah, Scott, one of the things I did like about what you're doing is the fact that you have I know you have a skew dex as well, and you have stuff for out of the money as well. So I'd like to ask you a few questions about use case, if you don't mind.
Sure.
Because really that's what it's about, right? One of the reasons why VIX actually taken off, and SEBO's tried to take the methodology across just about everything else, and they've kind of fallen on their face, right? I mean, I thought the gold vol one might work. It didn't. I thought that one of the interest rate products would work. It hasn't. So the reason why VIX works is because it has a natural end user, which is over the counter, big trading desks that are using it to hedge off variance risk, right? So who's going to be kind of your natural user of this product? And then question two, kind of a follow-up on that, do you perceive a retail trader or a institutional type hedge fund user using this product?
Yeah, those are good questions. First of all, let's talk about how individual users might use it. Again, as an individual's stock portfolio comes to look more and more like the NASDAQ 100, with Amazon above 3,000 and Apple and those giant names really kind of dominating, then using something that's more focused on the S&P 500 doesn't make a whole lot of sense. And so VOLQ, given that it focuses on the NASDAQ 100, should be the vehicle of choice for somebody whose portfolio looks more like the NASDAQ 100. And how might they use it? Well, we know that volatility moves inversely to stock prices. So if you want to hedge and you want to use volatility to do that, then you might very well get long VOLQ futures. You might get long calls to the degree that there is a VOLQ-based ETF that uses VOLQ futures shortly. You could use that. The amazing thing about American investors is they use all of these vehicles in really unique ways. They find ways to use them that surprise us. So those are some of the ways that you might think about using these products, but investors will surprise us. How about institutional people? I think that we'll see a lot of spreading between VIX and VOLQ because of the absolutely unique payoff profiles you can get. Not only S&P versus the NASDAQ 100, but it's a way finally to isolate skew. If you're long the VIX and you're short VOLQ, you are long skew. And I think that's something that a lot of institutional users will really be interested in doing.
That's actually fascinating. As I'm sitting here thinking about it, it's also an interesting way of maybe not perfectly isolating gamma, but I imagine that if you traded Q straddles versus VOLQ futures, you could come up with some really interesting ways of taking advantage of highs and lows in the market. For instance, think about if we'd had the ability to buy, say, a size up triple Q straddles in early April and then short VOLQ futures against that position, you could theoretically take off a ton of the kind of downside Vega risk while allowing the gamma to work in your favor. So just off the top of my head. Yeah, and I like that, there's going to be some interesting information. I was actually writing about this between VXN and VOLQ, where you can actually see, how is skew moving, how is at the money moving. I noticed that the contract specs are pretty big. When NASDAQ lists futures options, is it going to be similar to how VIX works, where, it's an index option that's cash settled, but essentially the same as the future? Or is it going to be 1,000 multiplier? Or what do you perceive as the contract specs when they list options?
It's a great question, and you have to understand that I can't speak for NASDAQ, and I won't speak for NASDAQ. I would expect that we would look for VOLQ options to have a $100 multiplier, which would be pretty standard. And that way, they're going to be sized so that people can express almost any point of view. And I don't mean to kick the can down the road, but you'd really have to talk to NASDAQ about the way the product would actually look as far as option specifications.
Yeah, one of the debates, and I'll leave you not to answer this. One of the debates I always had was, if you created a $1,000 option and made the cost, let's say, 85% of the cost of 10 $100 options, would that be a net increase in fees for in a product like VIX? I'm up in the air whether that would be a win. Moving on, to give our listeners some insight, do you imagine this having, because this is going to be the futures are European style, correct?
Well, the futures are going to be, the futures are cash settled, like so many financial instruments. So there's no making or taking a delivery. They'll cash settle on the same Wednesday morning that VIX settles, to cash, and they'll settle to the special opening quotation. And that ticker symbol, we calculate it every day so that people can get used to it, understand it, so that it's absolutely transparent. That ticker symbol is VOLS, VOLS. That's the settlement value.
And so do you envision, we're just starting to look, that it's going to have kind of the similar kind of trading at discounts and premiums, backwardation and contango, to the cash market, similar to the way the VIX trades, where, as we get closer to expiration, VLQ is trading closer and closer to VOLQ? Or do you think because this is kind of at the money volatility, it is going to trade a lot more, a lot closer to the cash index?
That's a great question, because we know that a big problem for people who want to use the VIX futures is the fact that they have this huge, enormous sometimes premium. Most of the time, they have a huge premium to the spot market. So you look at the VIX and you say, boy, I'd sure like to buy VIX at 28.38 right now. And then you look at the futures, and most of the time, you find that the futures are quite a bit above that level. And that exists for several reasons. We assume that VOLQ will have a smaller premium. The futures will have a smaller premium to the spot market or the spot index because of the way it's constructed. For example, if you look at the spread between the component options, then we would expect that spread to be smaller for VOLQ because we use fewer options and we use at-the-money options.
Speaking of that at-the-money options, it's kind of funny, and we have to keep rolling into our trading block in a little bit as well. But looking at the landscape now, Scott, looking at the different products that are out there and looking at some of, shall we say, the legal and regulatory issues that have veiled themselves on some of the other volatility products in the landscape. Going forward, I would have to think, if I was coming out with something right now, I would probably go straight up at the money just because of all the issues we've seen around calculating the skew with the volatility products and how it's been calculated, how it's been handled, and some of the issues that have arisen therein. So it looks like, Scott, at least for the foreseeable future, you're in the, shall we say, the right part of the vol space, at least for the time being, sir.
Well, we created VOLQ. We created the whole Voldex universe because it's the right way to measure implied volatility. And then we got lucky that it's the right time for VOLQ.
So if I'm trading, let's say November Qs, I would hedge off that vol risk with an October future to start, right? Because the October future is actually looking at essentially November volatility, correct?
That's right. Yeah, that's the best way to look at it. The October option expiration will be based on essentially basket of options, weighted basket of options with an expiration 30 days from that expiration date. Yeah.
Yeah, you've got it's pretty nice. I'm looking at the November at the money options have about a 34.6 vol, and the VOLQ future is about 35.25. That's a nice tight spread. So I like the way those two trade off each other. All right, last question, and then I will leave you alone because I know that our friends that are in Korea and Japan and in the East are going to want to know this. How do you think this would fit in the structured product space?
I think it would solve a lot of problems in the structured product space, which has, let's face it, it has a lot of problems that need to be solved. So I think it would be a really interesting tool for people who are in that space, want to be in that space. And we can create some fantastic products, but they often end up with second derivative problems that are lurking below the surface. We hope to help them solve some of those issues.
And we hope to help you guys navigate these markets as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show we break down what the heck is trading, what is lighting up our trading screens out there. And it seems like so far, about halfway through the show, still a whole heck of a lot of green on the screen out there. Most of the major indices firmly up well north of 1%. S&P and the Dow, actually, usually S&P is the laggard today. S&P and the Dow kind of neck and neck, both up about 1 1/3%. NASDAQ leading the charge once again, as it is wont to do, up about 1 3/4%. And coming into showtime, we also saw a little bit of froth, a little bit of churn on the vol space. We saw VIX cash at the start of the show was at about 28.65 or so. It has given up a little bit of that now. It's at about 28 1/3 or so. That still puts it up from our last show, up about a little north of 2 handles, almost 2 handles exactly from where it was this time last show. The VVIX, aka the volatility of vol, at about a 103 and change, up almost 3 points. So again, it's hovering right at that 100 level. We know below it, interesting things happen. And lately it's been kind of hovering right at that bound as well. And our old friend VXX, a.k.a. the product you guys like to fade day in, day out, not getting that fade love this week. About 25 and about 1/3 or so coming into showtime. Puts it up right about half a handle from this time last show. And since we spent the first half of the show talking about all things NASDAQ vol, let's get into that a little bit as well. VOLQ right now at about a 33 1/4. Puts it off almost about 3/4 of a point from just on today's action alone. So a lot to unpack in these markets today. Obviously, this green, a lot of it on optimism about Trump's prognosis, also maybe the prognosis for a stimulus package. But all of that seemingly lifting the markets today. But a lot to unpack there. Scott, we'll start with you as our guest there in the NASDAQ hot seat. What is lighting up your tape today in today's market, sir?
I think it has to be crude oil. Now, I'm a futures trader, always have been. Crude oil up 7%. Wow. I mean, it could do nothing right last week and the week before, up 7%. If that is because we now think things are going to get better rather than worse, then you would expect the S&P to be up 1 1/3% and NASDAQ to be up 1.6%.
You know, it's interesting. You mentioned you're an old school futures guy. We talk about this a lot on our TWIFO show every week over there with the folks at CME and FTSE Russell. We talk a lot about crude oil and the options out there. Have you been as surprised as I have been this past year, Scott, that outside of today and outside of a few aberrant events like last year with the bombing of the Saudi oil fields and a number of other things, just about everything we've seen out there, particularly through the lens of WTI, whether it's the option skew, whether it's the vol, whatever it is, has been fading pretty much everything north of 40 for a substantial amount of time. And it was that way again last week, despite the rally we're seeing out there. Has that surprised you at all, or is that you kind of just used to that by now, and anything north of 40 is just the market fades it?
In the age of COVID, I don't know why crude oil would get above $40 a barrel. The fundamentals are terrible. Last week, nobody's going any place. They may be driving a little bit. Last week, the Airline Industry Association talked about crude oil demand being down 2/3 next year. So I don't know why the fundamental demand picture would support crude oil about $40. Let's look at the supply. There's now concerns that anybody in OPEC Plus is going to say, well, I'm going to get while the getting's good. And what they mean is I'm going to get mine and I'm going to overproduce. I'm going to blow right through my quota. And so I don't care if you're looking at the demand side or the supply side. I don't think there's any good news for crude oil bulls.
Hey, Scott, you think that CME would eventually list a vol-O on oil? They used to run the CME oil VIX index, but since the crude went negative on that one expiration, they don't even run that anymore. I could see this being a nice replacement for that product.
Boy, you guys asking the tough questions about the exchanges.
Hey, just trying to inquiring minds want to know, Scott. I'm here for the people.
NASDAQ and the CME are great partners for us. But you would have to talk to CME. I think that all of the major asset classes, whether it's a particular commodity or a particular stock or a sector, people are better off when they understand what the option market is saying. And so we are working hard at Nations Indexes to bring all of these products to market.
Speaking of, before we rotate off of vol really quickly here, Scott, you mentioned today is launch day. I'm looking here to see if I can get any numbers out of here. Do you have any early insights into how this first launch day is going for the VOLQ futures?
Well, as everybody knows, futures are it's not like an IPO. It's a little slower to get started. We do have great support from market makers. We have great market maker program going. And so the CME is working hard right now to get all the markets lined up in VOLQ futures right now. And that's taking a little bit of time, as you would expect. So you'll have all sorts of opportunity, particularly if you're focused on, say, the election or something after the election, maybe January 20th. And then again, options expected to list sometime in the first half of next year. But again, a futures contract's not like an IPO. It takes a little bit of time to get rolling, and CME's doing a good job of getting that going.
Yeah, I'm looking forward to watching that. I'm sure we'll get updates on that on our TWIFO program. We have Tim McCord on that show all the time. I'm sure he'll come on to give us some updates on this one in the near future. Speaking of updates, Uncle Mike, this is an up day, so certainly an Uncle Mike type of day. What is lighting up your tape out there in this sea of green on the screen, sir?
Everything is awesome, of course. No, it's lighting up my tape today. We are at an up day, but we are not. We're kind of holding on to, or we're not breaking through the 3,400 level on the S&P. And so we came close to it, but we're still not doing it. We had a hard time doing it on Thursday last week, and we never did it on Thursday. So I think that is a little bit of a minor point of resistance. And then Friday morning, I just remember waking up early, seeing the news about the president having COVID, sending the markets down, but didn't send the markets down that much because a lot of it recovered by the time that the day started. And so with that, I am keeping a little bit more powder dry right now. I took some deltas off the table on Friday just for that reason. I'm still in just because of the fact that I'd like to see us break 3,400 first before I start going back to my uberly bullish ways, as Mark Longo likes to call it. So notice that. We are down a little bit in the bond world, meaning the 7 to 10 year treasuries are down in IEF. We have that. We have silver recovering a little bit from the pullback that it's had recently. So there's a lot of things going on, but I think Trump's health, in that it sounds like he was pretty bad on Friday, but now he's recovering very quickly, as well as the stimulus check, which is what we're talking. What there's a lot of talk about. So I think that overall, I'm not seeing a ton of movement right now, but I'm seeing in the near term, but I am seeing a lot of movement that could very likely happen if we get news on any of those fronts, whether it's the stimulus check, Trump's health, or even the status of the future debates. So that is what is lighting up my tape right now.
All right, and last but not least, he is beaming in by way of Texas. Probably got a brisket in one hand, maybe a bowl of chili in the other. Mr. Greasy Meatball, sir, what is lighting up your tape on yet another up day in the market, sir?
I did go to the Salt Lick barbecue over the weekend. I
think County Line is the hot one. Isn't that the hot one out there? At least that was back in the day when I used to go.
Salt Lick is the one that everyone goes to.
Oh, new barbecue regime.
No, it's been around forever. It's the big one. But today kind of felt, and I did put this out in my blog today. Kind of what happened on Friday reminded me a lot in the opposite way of what happened when Osama bin Laden got caught. We had like this knee-jerk reaction where futures on that day, actually it was a Monday night, futures rallied really, really hard, and then they faded. We kind of saw that and we ended the day barely up. We kind of saw the same thing on Friday, right? We came in and markets were like, and Friday I'm watching us down 500 points in the Dow and 70 points in the S&P, and I'm asking myself, really, what are the odds that the president of the United States, even given his less than healthy lifestyle, is not going to get the absolute best treatment and be 100% better by Monday? And I think we've seen how quickly markets will recover from something like that. Friday was extremely one-off-ish, and the morning was the single best opportunity to fade a knee-jerk market reaction that I've seen in, probably since Trump got elected in 2016.
Yeah, a lot has unfolded in the marketplace and in society since those heady days of 2016. By the way, you guys have asked for it, so I think we're going to have another live election night special. Should be a fun time. Hopefully not quite as tumultuous as 2016 was from an overnight index and volatility movement perspective, but you never know So pencil in to join us there live on election night. Should be some interesting stuff to parse. Let's see what's interesting in the markets right now in terms of overall volume. Coming into a latter portion of the show here, we're seeing decent volume on the tape, but not a ton. VIX is just a tick shy of 250,000 contracts right now. The ADV, of course, about 360 out there, so pretty light out there. You're getting back to, seasonally adjusted August numbers out there in terms of light volume in the vol space. SPY at about 1.85 million contracts as of a few minutes ago. The ADV a little bit shy of 5 million, about 4.5 million out there. The SPX out there at about 463,000 contracts. The ADV a little bit north of 1 million these days, which is kind of nice to see, about 1.2 million. Still kind of light, but better than it has been out there of late. The Q's kind of light today, surprisingly light, given the movement we're seeing out there in the NASDAQ. About 385,000 contracts on the tape right now. The ADV, about 1.5 million exactly. So the Q's have a bit of a ways to go. Of course, if you've been trading NASDAQ for a while, you're probably pretty used to these big swings by now, so maybe that's why they're not lighting up the tape out there. And the small caps, a.k.a. IWM, at about a little north of 250,000 contracts as of a few minutes ago. The ADV, about 521 out there. Let's go out to the top 10, see what's lighting up the individual equity options out there today. Cost you 140,000 contracts to break into the top 10 today. That gets you all the way to GE. Number 9, BABA, about 142,000 contracts. Number 8, good old Microsoft, 146. Our symbol twins are back. Bank of America and Boeing, once again, neck and neck. Number 7, Bank of America, 169,000 contracts. Then number 6, our friends across the street here, Boeing, still waiting for the return of that barbecue over there every week. 171,000 contracts for Boeing. Number 6. Number 5, Facebook, 190,000 contracts. A lot of mostly familiar names here in the top 10 today. Number 4, NEO, getting back to the electric cars over there, 208,000. Number 3, AMD, fighting its way into the top 10 today with 239,000 contracts. Then we jump up yet again, another order of magnitude, all the way up here to Tesla. Number 2, actually a fairly quiet day for Tesla, only 520,000 contracts. I put only in air quotes there, listener. That means number 1, you guessed it, it's Apple. Another one kind of light today. Usually by this time of the day, it's already threatening 1 million contracts. Right now, only about 739,000 contracts on the tape out there. So not a lot to parse out there. Also interesting in terms of, I should say not that interesting really, in terms of what's lighting up the tape out there. Odd block-wise, pretty much a lot of love out there in Altice USA for the puts. A lot of people trading the Jan 20 puts out there. So it is Monday. Let's see if he can regale us with something interesting. Let's go to a real quick Monday edition of the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. It is Monday, so we'd be remiss if we did not turn the attention over there to Uncle Mike so he can dispense some options, wit, and or wisdom. Uncle Mike, sir, another crazy day, another Uncle Mike type of day. A lot of things popping off in the broad market today and indeed this week. What do you have in store for us today, sir?
Well, I want to talk about, we've been talking about on the odd block a lot, you and Andrew have. And so I want to talk about how I actually used the line in the sand concept, and I'm actually using it right now. So on Friday, when the markets came down, pre-market, for me, I was very happy that the dump came pre-market with the Trump announcement, because that gave me time to not have to overreact or have to just be in that position. And that I just kind of looked at everything and did what I did. And so as the end of the day came, I just made the decision. It's like, for the deltas that I have on right now, I'm not going to get out. I didn't feel comfortable getting out of the marketplace, but I definitely wanted to reduce risk. And my thought process is that the market's either going to go up, down, or sideways. And by reducing deltas, if it goes down or goes sideways, obviously that's a good thing. And then if it does go higher, that would be the bad thing of reducing my deltas. If it goes up a little bit, not missing much because it's not really doing much. And if it goes up significantly higher, then I'd be missing out. And so I made the bet on Friday that the market would not go up significantly higher over the weekend. Now, granted, it is up today, but we still haven't gone through the 3,400 mark, which is kind of my line in the sand right now. And so with that, the actual strategy that I did is I had a longer-term call spread going, and this is for my SPY strategy. And so what I did was I turned it into a butterfly for over the weekend or until we passed through this line in the sand. And so as of now, we have not. We've come close to it, but we have not. And the reason that I'm doing that is that I'm of the school of thought right now that whereas with the uncertainty with which we have right now, with Trump having the virus, with us not having the stimulus check, I really don't see a major rally coming until those two things are resolved. For the time being, am I ready to get out of that if we touch the line? I like having less deltas on the table with what I'm doing, but I have less time decay risk, and also I have less deltas for the time being. But with that being said, the line in the sand is what's keeping this trade in good shape from the standpoint that if I'm wrong and if we do rally to the extreme, then when we touch that number at that point, I will make adjustments. So with that, I know we got to be a little bit quicker today for the strategy block. Line in the sands, they can be used for puts, meaning if you are selling a put and you have a line in the sand, meaning if the stock goes to a certain level, you want to get out of the put, roll the put, whatever. But it can also be used for calls in that if you have money off the table and you want to keep it off the table for the time being, but if the markets do rally, you have to do the right thing and get bullish again if you want to catch the upside. Then that's where a line in the sand can be used for calls as well as butterflies, spreads, or anything else for that matter. And that is the strategy block. First one is a 43-year-old.
Welcome to the club, sir. It's a fun club as you keep inching up there. And as we keep on inching on with this show, we got a little bit of time. Let's see if we can squeeze in a few of you with a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. You know where to find us at Options on most of the major social media platforms, via our app, our website, all of the various outlets where our shows are available. Questions at theoptionsinsider.com. Carrier pigeons, they all work. You guys know how to find us. Also know how to find us in the various outlets where our content is from. Let's kick things off. These are troubled times out there. A little bit of love. This one comes from Frank K. I believe this came from the Google Play Store. A 5-star review from him. He said, a solid learning experience. They provide a great service. Well, thank you there, Frank. Again, you guys can leave those reviews pretty much wherever you find our content, including a lot of you like to go to the App Store. That's where our app can be found. Just search for the Options Insider Radio or Options Insider or the full name Options Insider Radio Network. It's all there. You guys can leave those reviews there as well. We appreciate those. And, of course, it keeps the new folks. We've been doing this for well over a decade, but these days it's more important than ever to give folks a reliable source of content out there. So if you like what you hear, keep those reviews coming, just like Frank K. did over there in Google. And a lot of interesting questions, but this one kind of strikes my fancy out here today. Kind of a fun one. This comes from Ed. Ed wants to know, do you think we might see a return of the mini options with so many popular tech stocks, aside from Apple and Tesla, trading at astronomical prices that are beyond the reach of most retail traders? It's interesting you would mention this. I have heard a couple of people asking similar questions like this as we are in this insane march in the rally, particularly in a lot of the tech-heavy names that you mentioned here, Ed. And, of course, the last time we saw all this, when Apple was threatening 700 and all that other fun, this is the last time we really saw this rush to embrace the mini options. And we all know how that worked out, maybe not so well at the end of the day. But interesting timing nonetheless. Maybe there are a few problems with this, but are worth discussing here. Scott, you're our guest. We'll start with you. What do you think here for our question from Ed? Do you think the fact that we've seen such lofty valuations of so many tech names out there, might that herald the return of the mini options, sir?
I think mini options are an interesting product, and let's break it down. Normal equity option contract covers 100 shares. The mini equity option contracts cover just 10 shares. And for something like Amazon, a 100-share contract, you end up talking about $350,000. So, even if somebody wanted to, say, sell a covered put, which can be a great strategy to buy the stock at a discount, you do one of those, and you're talking about $350,000 you got to set aside. So I think that the mini options for some of these really big names would be fascinating. So I don't know what the exchanges are thinking, but boy, that would be a neat product.
It certainly is an interesting use case for these days. Of course, I think Ed points out one of the problems with them is that they can, of course, split and that kind of eliminates some of the use case. That's what happens with the mini options, among many things that happened with the mini options. That was certainly one of them. Let's go around the horn. I'm sure everyone else has thoughts on this. Let's start with Mr. Meatball, sir. What are your thoughts on the potential return of mini options, sir?
I think it makes a lot of sense, and let's go through the list. It really starts with the Robinhood trader, right? Your Robinhood traders are now trading more on a daily basis than people at Schwab, people at TD Ameritrade. It's absolutely nuts. But the reason why it works, and the reason why the mini options didn't work, is that listen, I like brokers. I have lots of friends that are brokers, but the brokers did not want to play ball. They wanted nothing to do with these mini options. They were still charging full price to trade the mini options. So you pay $1 a contract to buy a regular Apple call, or you pay $1 a contract to buy an Apple call worth 1/10 the number of shares. I think it really drove a lot of customers away. Couple of things. Now that we're in this model where a big chunk of the world has essentially accepted that they don't mind their order flow being sold if they get it for free. I know as a market maker, now, Scott, you were a market maker as well, and I know, Mark, you were. The mini option, the amount of per contract that I'd be willing to pay to get all the mini option flow that is produced if these things got produced, I would venture to say that if I'm Citadel or Wolverine or Mark, Sebastian Nation, Longo, Market Making Incorporated, I would pay more for 10 mini options as a whole than I would for a single option from some of these sources, because frankly, I would know that it was and we use this a little flippantly, but we would say kind of stupid paper, and not stupid in that the end user is actually dumb. It's just they didn't know any more than me, right? Everybody knew that there were a couple of customers out there that were really smart. You don't run into them with the mini options. So I think that these could be wildly successful, and on top of that, really help out a lot of younger people that maybe shouldn't be buying 1 and 2 lots of the full Amazon calls or Apple calls. I think it makes tons of sense, and I think if they did list this, it could be a huge profit driver for the brokerage houses. I would be, if they announced these coming back, I would be that would cause me to get pretty bullish some of the brokers.
Interesting. Maybe the second time will be the charm for the mini options. Uncle Mike, you get the last word, sir. Do you agree? So far, it sounds like we have 2 votes in favor of mini options coming back. Do you agree, sir? Or are you going to take the counterpoint, sir?
No, I agree. I think that if the brokers do play ball by lowering the prices, I think that would make a lot of sense, just because of the fact that there's demand for it again. And with the higher prices with a lot of these, I think it could be a very successful product. I just think, like Mark said, the brokers need to play ball on it. I mean, I know that I have clients that we can't sell covered calls sometimes because we have 232 shares of something or something along those lines. Many options would solve that problem quite a bit. So I would personally use them just on times when we have 841 shares or 14,362 shares or something like that. I would definitely welcome them, and I would use them personally if they were liquid enough and if they worked.
All right, people clearly want to talk about mini options. We're getting more questions in the live chat about that. We'll have to keep on rolling, though. We'll get to, I have a feeling, more discussion of mini options maybe on the show on Thursday. Now it's time for us to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you know what time it is. Time to tell you what we're watching until we can all gather here together on the program again on Thursday. Scott, we'll start with you. So you kind of already touched on NASDAQ vol, you touched on crude oil, but what is on your trading screen? What are you keeping an eye on for the rest of the week, sir?
Well, I think the dollar is interesting. Dollar index below 93.5, surprisingly strong. confusingly strong. And then obviously I'm going to be watching VOLQ down 2% right now and VLQ futures at the CME.
There you go. Got to get that plug in, sir. But that is an interesting one to watch, particularly as they are popping off over here. And Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on for the rest of the week until we can gather here together again on Thursday?
3,400, COVID with Trump, as well as a stimulus bill, and any news from how they're going to handle the upcoming debates.
That will be interesting. Puts certainly a new light on the vice presidential debate this week, given Trump's diagnosis last week. And last but not least, Mr. Meatball, sir, what are you watching for the rest of the week?
You know, I'm watching these markets. I think that, the dollar, the way bonds are absolutely getting punched today, I think is really interesting. And I'm wondering whether that's going to be a continuing trend. And is that a part of a move toward risk off over the coming few days and weeks? And I'm going to still keep an eye on that election premium in both VOLQ, spikes, and VIX. We have huge volatility premium built into a lot of these forward contracts. They produced a lot of interesting trading opportunities. So I'm going to be watching that part of the market. And Scott led off the show with this, and I'm going to end it with that. I think you got to watch oil and how that moves over the next couple of days.
Unfortunately, that music means we've come to the end of this epic sojourn through the world of options. But before we go, let's go back around the horn. We'll start with Scott holding down our NASDAQ hot seat. You kind of touched on the top of the show, but if folks are intrigued by all things VOLQ, Scott, they want to learn more, maybe want to kick the tires for themselves, where should they go? What should they do?
Well, the CME and NASDAQ both have great microsites on their own websites for VOLQ. So if you were to search NASDAQ VOLQ or CME VOLQ, you'll find that information.
There you go. Head on over, NASDAQ.com/VOLQ. Place to go for a lot of great detail. If you want the contract specs, like Scott mentioned, CME will have as well. Just type VOLQ into your browser, VOLQ. You should be able to find all that data and a whole heck of a lot more. And Uncle Mike, sir, if folks want to reach out to talk all things mini options maybe, or maybe election volatility or anything else that's on their minds, where should they go? What should they do, sir?
Head to my website, stcharleswealth.com. My contact information is on there. Feel free to reach out to me in any way, and we can talk about option volatility, mini options, or if you're really intrigued, we can talk about the possible reunion of the mini metals for those of us longtime listeners to this show.
Yes, the mini metals. I don't know if they can make it all the way down to Texas now. We have to see. But we do, fortunately enough, have the manager of the mini metals with us right now, a.k.a. Mr. Sebastian. Mr. Meatball, sir, in addition to booking future tour dates, it's got to be kind of hard in the pandemic for the mini metals. If folks want to reach out to you, check out some of your blogs or all the other fun stuff you guys have cooking, where should they go? What should they do?
You know, first off, I went back through my notes, and I'm pretty sure we had Scott on right in the middle of the China trade war debacle. And that was kind of the first time we'd had a deep dive on VOLDEX and VOLQ. And I think that you go to optionpit.com, and I'm going to send you a ton of awesome information. I write a daily blog on VIX volatility, now VOLQ. So if you want to learn about volatility, go to optionpit.com, sign up for our email list.
There you go. Optionpit.com is the place to go. And on behalf of Scott and all our friends over there in NASDAQ land, and congratulations on the launch of a product. No mean feat in today's environment. And, of course, Mr. Meatball and everyone over there in the land of the pit, and indeed Uncle Mike, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, all the fun that you do. Keep it coming. And we'll see you back here a little bit later today for the Crypto Rundown, then throughout the rest of the week for all the other fun programming we have on the network, all the way through to Thursday, where we come back right again with another episode of The Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ. Tech forward. leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.